We all have opinions. Our official dictum is that it's okay to have an opinion, you just shouldn't act as if it's right. And I think this is very important. You know, Mark Twain said, it's not what you don't know that gets you into trouble, it's what you know for certain that just ain't true.
Are you looking to start your investment journey in 2024? Maybe this is not the best time to start, said Howard Marks. Why did he say that? Did you know that Howard Marks has more than 20 years of experience with the equity markets? He has seen markets upside and downside, and hence has a good idea of how they might perform in the future. 2023 has been a crucial year for financial markets, which have shown growth and tenacity even in the face of uncertainties and issues around the world. Though you might want to start investing on your own, is it better to take advice from numerous investors? You're about to start your financial journey from scratch and are confused about how to start. So you start watching several videos and articles and found that you need to pile up the available resources. This will help you reduce the wastage of time in finding good materials. Where do you see yourself as an investor in the next 5 years? Howard Marks is the chairman and co-founder of Oaktree Capital Management, and he is worth more than $180 million. Moreover, he is also the author of well-known memos, which make the public and clients excited. Even though the majority of analysts predicted that the US would have a recession in 2023, economic growth has continued to surprise everyone. Consumer expenditures, notwithstanding inflationary pressures, drove the market upwards in 2023, and US employment also remained stable. The economy gradually cuts jobs. Although unemployment was still low, Citigroup's Economic Surprise Index was in good flow in 2023. But will it continue its bullishness in 2024? What's your take on this? After piling up all the materials that will help you kickstart your financial journey, you decide to start with them. You started with books by remembering the quote, "Books are the mirrors of the soul." You grabbed a book named Rich Dad, Poor Dad, which your friend recommended. He told you that the book will help you reshape your financial perspectiveness. In every quarter, more than 75% of the 2023 S&P 500 companies exceed analyst expectations for earning per share. The largest average profit surprise since Q4 2020 was recorded in Q3 2023. It was valued at 7.5%. But does that mean that there is no probability of a fresh high for profit in 2024? Well, similarly, 2023 gave more returns than analysts expected. We could see that Howard Marks gave a good prediction on how the market will perform. Marks said that the government actions can have significant impacts on the markets. After completing the book, you now know that the house and car you use daily are no longer an asset, as they are consuming your money in the form of maintenance. This became a fresh perspective for you, and now you crave more such insights. Marks said that even though the current economy is not performing well, the time will reveal those swimming naked. Marks added that it will be the time when loans in 2021 and 2022 begin to mature. According to Marks, a worse economy combined with a surge of maturities might result in a wave of huge debts. He continued, "While rates were still close to zero, we are forced to face the fact that they have been delaying those maturities for years." Marks continued that if you get maturities spiking in a weak economic period, or weak for certain groups, that is the time one has to be cautious. We're really talking about maturities that have been pushed off to next year. After getting a good financial mindset, you're now starting to learn about different investment types. However, you don't have much money to go for real estate investments or rental income, so you decided to learn about how stock markets work. Marks added, "The question is which companies and industries are performing well when conditions get tougher." He argued that the key now is to figure out whether prices reflect reality and get to know whether we are in an underdeveloped or overdeveloped economy. What would that look like if you were to start purchasing things like books, courses, and so on that others don't value? Marks said, "You might be insulted for doing such things, but they don't know how much value such assets can bring." Marks also expressed his belief that inflation in the US economy should come back to 2%. Moreover, he anticipated that the Federal Reserve Chairman, Jerome Powell, would soon announce the exciting news. As a person who is starting completely from scratch, you don't even have any savings to start your financial journey. So you decided to add some value to the people around, who can pay you in return. You are a person who can write good content, so you started looking for clients who need your service. Fortunately, to your surprise, you were able to get a client who paid you very well. According to Marks, Powell stated that rate cuts won't occur until the economy is moving towards 2%. He added, "I believe the phrase 'towards' holds great significance." Powell remained silent until we reached 2%. Maybe he will start cutting if inflation starts to reach 3%, 2.75%, or even 2.5%. Marx did point out that because of the greater returns being offered, people who started investing in credit instruments like Oaktree Capital Management are profiting from the present interest rates. Your content writing journey is going pretty well, and now you're going to scale this by starting an agency. However, you understood the importance of having a team to scale the business better. Fortunately, your networking capability helped you identify some members who can be valuable assets. Now, you're working as a team to scale the business. According to Marx, while rates are not historically high, they are higher than they were between 2009 and 21. Hence, this implies that investments in credit, fixed income, bonds, and loans will yield larger returns than those made during that period. He added, and we can see that the returns will lower in the period between 2009 and 2021. However, after focusing more on the agency business, you found out that you are not getting that much time to learn about investing. Hence, it will help if you started researching experts who can help you in the investment journey. Soon, you identified Howard Marks as a good match for your purpose, so you started following him. Along with doing your research, according to Marks, a lot of investors are hoping for a high return in this era of really low interest rates. But he believes that time is gone. Although rates have increased more than they have in the previous 20 years, he claims that they are still not high when compared to historical values. Marx also described how the Fed funds rate was at an average of 8.2% in 1969, the year he began working. At that time, he said that the rate varied from 4% to 20% over the next 20 years. Want to know how the rate was between 3% and 8% from 1990 to 2000? Marx considered this period as an average one, and he compared that with the current rate of 5.25 to 5.5%. Although you were able to find many successful predictions made by Mark, you couldn't mark any future predictions, so you started looking for one. The whole idea is to grow your wealth over time and beat inflation, and you believe that Marx can have a huge impact on this. Mark believes that soon inflation will rise to the Fed's target of about 2%. As a result, no further rate hikes will be required. Moreover, he anticipates a gradual recovery followed by a slight recession. Furthermore, Marx predicted that the Fed will have the ability to lower rates once more. Hence, the stock market and economy should benefit from this. Although he raises doubts about it, he doesn't disagree with this popular opinion. We need to know that nothing works perfectly in this imperfect world. You are now spending some time watching the predictions from Marx. Now, you are happy that you learned something about how the market works in real time. Marx believes that US rates will be between 2 and 4% for the next several years. In addition, he stated the rates will, on average, range from 3 to 5.5% during the next 5 to 10 years. So, if you are a person who has some idea about human history, you might want to know what is the basis of human sustenance. We can evolve and sustain ourselves in a changing world. Those who struggle to evolve will perish. That is the law of human nature. One of Marx's strongest qualities is his ability to assess market conditions without any partiality. Moreover, he is more subtle. While many investors strive to make headlines with extreme opinions, we can see that in his most recent stock opinions. According to Marx, the US market is neither abnormally high nor low and doesn't present a fat pitch. We've heard another sentence that conveys the same meaning as Warren Buffett's. After learning all the concepts, you are now planning to make your first financial investment. Moreover, you thank the past you who took that decision to level up. Our investment journey with Howard Marks is coming to an end. Hope you got some insights on how the market really works, especially during these hard times. Please don't forget to hit the like button, and if you found today's exploration insightful, don't forget to subscribe to our channel for more thought-provoking content. Thanks for watching!